Hello everyone, and thank you for joining today's True Trading webinar. I am excited to be here with you. My name is Mohammed Azim from Traders United. First, a disclaimer. True webinar house rules. Please take the time to read important rules for webinar attendees. Let me start by sharing a little information about myself. I am a certified elite wave analyst, having earned my level 1 certification back in the year 2012 with a score of 93%. This certification deepened my understanding of market behavior, especially through the lens of elite wave theory. In addition to my work as an analyst, I am also an author and educator. I wrote Introduction to Elite Wave Theory, a book designed to help traders like you build a strong foundation in understanding the intricate structure of market waves. But my expertise does not stop at Elite Wave. Over the years, I have expanded my knowledge into broader market analysis, diving deep into market trends, chart patterns, and price action strategies. So, whether you are a beginner or an experienced trader, I aim to provide you with valuable insights that will help you navigate and succeed in the Forex markets. With that, let's dive into today's session. These are the topics that we are going to cover inside today's webinar. Let me talk about macroeconomic events and data releases. I am going to cover previous week fundamental analysis. Let us start with the first one, Consumer Price Index, CPI. And this financial news has related to Swiss franc. So the currency pair is the USDCHF currency pair that is going to be affected. It actually got affected by this financial news. Now, let me talk a little bit about it. The Consumer Price Index, CPI, M over M means month over month, measures the monthly change in the average price of a basket of consumer goods and services in Switzerland. It is a key indicator of inflation trends, helping assess price stability and changes in the cost of living within the Swiss economy. The Swiss National Bank (SNB) closely monitors CPI data when making monetary policy decisions. A higher than expected CPI could lead the Swiss National Bank to adopt a more hawkish stance, potentially strengthening the Swiss franc. Conversely, lower inflation could prompt expectations of monetary easing, which might weaken the CHF and push USDCHF higher. Now, on April 3rd, we got the actual number, and the reading was 0.0%. The forecast was 0.1%. The previous number was 0.6, and we actually got 0.0%. While the market expected inflation to remain steady at 0.1%, the actual CPI came in at 0.0%, which could lead to notable movements in USD-CHF currency pair. Now, the possible price impact on USD-CHF is that if CPI is higher than expected 0.1, the previous number was 0.6, and the expectation was 0.1. So if CPI is higher than the expected level, we assume that the inflationary pressures may prompt the Swiss National Bank to maintain or tighten policies, strengthening the Swiss franc. So USD Swiss franc could decline as a stronger Swiss franc against the USD. Now, if CPI matches the expectation 0.1%, the market may react neutrally as the data aligns with forecast. Now, let me show you the price chart that what exactly actually happened. Well, we were expecting kind of a little bit pullback in USDCHF currency pair, and after that, I told you guys that the trend is down. So overall, we got the weakness in price action. So on the April 3rd, CPI report offers valuable insights into Switzerland's inflation trends and potential SNB policy adjustments. A surprise uptick in inflation could strengthen the CHF and push USD-CHF lower. Conversely, weaker than expected inflation could lead to a weaker CHF, allowing USD-CHF to rise. Now, the market participants will closely monitor the CPI data as it could influence the SNB's monetary stance and drive USD-CHF movements. A higher than expected CPI may lead to CHF strength, while a lower CPI print could weaken the CHF, supporting a rise in CHF. So we got the number at 0.0%, and due to this reason, we got the drop in price action of USD CHF currency pair. Rate related to Canadian economy, and the currency pair we're going to discuss is the USDCAD currency pair. Now, let me talk a little bit about what is the unemployment rate. The unemployment rate measures the percentage of unemployed individuals actively seeking work within Canada's labor force. It is a key indicator. It is a key economic indicator reflecting the strength of the job market and the overall health of the economy. The Bank of Canada, BOC, closely monitors labor market data as a strong employment report may support tighter monetary policy, potentially strengthening the Canadian dollar. Conversely, a weaker labor market could lead to monetary easing, which may weaken the CAD and push the USD-CAD higher. Now, the report results are the previous number was 6.6%, forecast was 6.7%, and we got the actual number at 6.6%. The market expected the unemployment rate to rise slightly to 6.7%, while the actual data met expectations. The result still triggered significant movement in USD-CAD, causing it to drop. If you take a look at USD-CAD currency pair, we got a drop in price action of USD-CAD, but after that it did try to bounce back up as well. Now, the generally speaking, we say that if the unemployment rate is lower than expected, which is 6.7%, if we get lower than that, then it means a stronger labor market suggests economic resilience, reducing expectations for Bank of Canada rate cuts. So CAD may strengthen, leading to a drop in USD CAD. Now, what happened is that we got the 6.7%, and that was the forecast, that was, I would say, the expectation. Okay, so USD CAD drop following the release suggests that the market sentiment is already factoring in other supportive factors for Canadian or Canada economy. If the unemployment rate is higher than expected, like the expectation was 6.7% and we get 6.8 to 6.9%, then it means a weaker job market could signal an economic slowdown, increasing speculation of monetary easing by the Bank of Canada. And if you do get a bullish leg in price action of USDCAD and you see a rise in USDCAD price action, then it means that the Canadian dollar weakens against the USD. So what happened is that the unemployment report provides important insights into Canada's labor market health and influences Bank of Canada monetary policy expectations. Despite the unemployment rate meeting expectations, USDCAD dropped, which suggests that investors are more focused on the strength of the Canadian labor market and its potential to support a firmer CAD. If the unemployment rate had been lower than expected, CAD would likely have strengthened further, pushing USDCAD even lower. So if you take a look at a price chart, you see we got a drop in price action, but soon after that market did try to rally back up over here. Okay, next let us take a look at the euro dollar and British pound. These are the two pairs we analyzed. So euro dollar, I was kind of expecting a pullback around 1.0685, but price did go up. So now the expectation is that market is now going to fall from current levels. Okay, and after that price action is going to rise back up. So I basically expect I would say a sideways type price action. Overall price action is going to drop, and then expect a bullish leg. So a good idea is to look for a buy trade at a pullback level, and we have this support over here at 1.0807. Next one is the pound. The GBPUSD currency pair actually created a false breakout. Let me show you. We got the divergence with the RSI. If I zoom out a little bit, and this was a false breakout right over here. So this was a false breakout. Just market was just trying to fool traders, and then we got a long spike in market, and after that price action started the drop. Now anyone could notice this decline in price action over here, which actually took out the support level. The way I see price action is probably going to rise up, and after that it's going to drop lower. So this is the expectation that the price action, this bearish price action is most likely going to continue the decline, but it is not going to drop from current levels. Wait for a pullback, and then might be get a nice sell trade at or around 1.2868 area. Okay, next let's talk about current week. So macroeconomic events and data releases. The first one is the official cash rate OCR related to New Zealand, and the currency pair is the NZDUSD currency pair. Now, what is the official cash rate, or what is OCR in Forex related term? The official cash rate OCR is the interest rate set by the Reserve Bank of New Zealand to influence short-term interest rates and control inflation within the economy. Changes to the OCR directly affecting borrowing and lending rates thereby impacting consumer spending, business investment, and the overall economic climate. The Reserve Bank of New Zealand adjusts the OCR to manage inflation and economic growth. An increase in the OCR usually aims to curb inflation by raising borrowing costs, while a decrease can stimulate economic activity by lowering borrowing costs. Now, on April 9th, uh, we have a previous number and it stands at 3.75%. The forecast is 3.50%. The actual data hasn't released yet. Now, the market it has an expectation that we are going to get the official cash rate at 3.5%, and that is going to be a signal that the Reserve Bank of New Zealand efforts to manage inflation and support economic growth. The actual release of the data could still lead to significant movements in the USD and the DUSD currency pair, depending on whether the results matches or exceeds or falls short of the expectation. The expectation, like I've said earlier, it's 3.5%. So the possible market impact on New Zealand dollar versus US dollar would be if the OCR is lower than expected, like the expectation is 3.5%. If we get lower than that, uh, a larger than expected cut in the OCR could signal increased easing, which would weaken the NZD, and NZDUSD may fall. It's going to drop more. Now, if you check out the chart of NZD/USD currency pair, here it is. This is the chart of NZD/USD currency pair, and it looks bearish. It took out this low. It took out even this low as well. Now it might find some buyers down over here. As far as the technical analysis is concerned, it's possible to get some buyers over here. Market might try to rise back up. We'll see how it goes. So if we get lower than expected number, then the USDCAD and the DUSD is most likely going to drop more. And we could say that, the number would be, more dovish. The Reserve Bank of New Zealand outlook could drive the New Zealand dollar lower. Now, if the OCR matches expectation, the 3.5%, the market may translate the result as neutral, leading to sideways price action. So we might get a limited impact on NZD/USD currency pair. And if we get a higher than expected number, the expectation is 3.5%. Let's say we get 4 or 4.5%. Or maybe 3.75%, that would signal a less dovish stance from the Reserve Bank of New Zealand, potentially strengthening the NZD, which means the NZD USD currency pair is probably going to rise up, as a more hawkish Reserve Bank of New Zealand stance may boost the New Zealand dollar. So my overall analysis for the official cash rate related to New Zealand is that this report will provide key insights into the Reserve Bank of New Zealand's stance on managing inflation and economic growth in New Zealand. If the OCR cut is larger than expected, it may weigh on the NZD, driving NZD USD lower. However, if the OCR is kept unchanged or only slightly reduced, NZD USD could see upside potential as traders anticipate a more hawkish outlook. Okay, next let's take a look at the core CPI for the USA, and we're going to discuss the euro dollar currency pair. Now, what is core CPI? The core consumer price index, or core CPI, month over month measures the monthly change in the average price of a basket of consumer goods and services, excluding food and energy, which tend to be more volatile. This data provides a more accurate view of underlying inflation trends, helping to assess the cost of living and price stability in the economy. So the core CPI, it's a key indicator for the US Federal Reserve in determining monetary policy. Higher than expected inflation may prompt the Fed to raise interest rates, which can strengthen the US dollar. Conversely, lower inflation might signal a slowdown in US economic growth and potentially leading to rate cuts and a weaker United States dollar. Now, we are going to get the report on April 10th, but let's talk about the expectations. The previous number was 0.2%. The forecast is 0.3%, which is the expectation. The actual data not released yet. So the market expects the core CPI to rise by 0.3%, slightly higher than the previous month's 0.2%. Any deviation from this forecast could lead to significant price movements in euro dollar currency pair. Now, possible market impact on euro dollar is that if the core CPI is higher than the expected 0.3%, then it means the higher inflation could prompt the Federal Reserve to adopt a more hawkish stance, potentially increasing interest rates. A stronger USD may lead to a decline in Euro USD as the euro weakens against the US dollar. If core CPI matches expectations 0.3%, that's the forecast, so you could say that's the expectation, the market may translate the result as in line with forecasts, leading to a neutral impact on euro dollar currency pair. If you take a look at a price chart of euro USD currency pair, is the daily chart over here. I'm basically, based on the technical analysis, I'm expecting price action to fall a little bit more and then bounce back up, to resume the uptrend. Now, if core CPI is lower than expected on 10th April, okay, then it means lower inflation could suggest economic weakness, leading to speculation of potential interest rate cuts by the Federal Reserve. And this could weaken the US dollar, pushing Euro USD higher as the euro gains strength. So the trend is your friend, so follow the trend. Right now the trend is up actually in euro dollar currency. I will talk a little bit more about the euro dollar in next few minutes time. So overall my analysis is that on April 10th, core CPI report will provide crucial insights into underlying inflation trends in the US. Higher than expected core CPI could lead to a stronger USD, which means euro dollar is going to drop, while a lower than expected core CPI may lead to a weaker US dollar and a rise in euro USD as market expectations shift towards potential rate cuts. So the conclusion is market participants will closely monitor the core CPI data for signs of inflationary pressures and its potential impact on the Federal Reserve's monetary policy. A higher than expected core CPI number could strengthen the US dollar and lower Euro USD, while a weaker reading could result in a weaker US dollar, supporting a move higher in Euro dollar currency pair. Okay, next let's talk about current week global market trends. We're going to discuss the Euro dollar and Australian dollar currency pair first. So this is the daily time frame of euro dollar currency pair, and this is not a coincidence that we got a top right over here. If I remove all of these trend lines, and let's try to use a Fibonacci expansion tool. I'm going to change the values over here. Let's try it again. Okay, so we got 1.618, and then we have, let me add one more, 2, and then we have 2.618. Okay, so this is 2.618. This is basically the Fibonacci extension, or some people call Fibonacci expansion. This is 1.618. Okay, so you see we got exact hit right over here. If I move this one a little bit to the right hand side, you can easily see that we got an exact hit right at 2.618% of Fibonacci retracement level. So overall, I would simply say that the trend is up inside euro dollar currency pair. If we just simply take a look at the chart pattern, which is currently bullish. Okay, so this is the support. Okay, so price action actually printed higher swing highs and higher swing lows. It's like stair steps. Price action is moving up. So it's a nice uptrend going on inside euro dollar currency pair. Next, let's take a look at Australian dollar versus United States dollar currency pair. AUD USD currency pair. Okay, let's go here. Okay, if you look at the Aussie dollar currency pair right over here, we got this support right over here, and so far price action is trying to clear out the support level. Okay, it's trying to close lower on a monthly basis. However, this whole thing could fail if market tries to rally back up. So we have this strong support level over here, another one down over here, and it looks quite possible that price action is going to bounce back up from these lows. Now, the question is, when do we expect that to happen? So let me show you a chart over here. Okay, AUD USD. So we have this support and then resistance going on. So this is the swing low, and this is a long spike right over here. So we assume that if price action manages to close, I would say, a bullish candlestick above this resistance level in a 1 hour time frame, then the chances are high that the Aussie dollar is going to print a bottom. It's going to rise up. However, if price just keep falling down, down, and down, then obviously uh, we do not expect that to happen. So it's quite possible that maybe next week, or maybe at the end of this week, we might get a bottom inside AUD USD currency pair, because just testing these lows over here. Next, let's take a look at New Zealand dollar. Now we got almost the same story in NZD USD currency pair. Here's the daily time frame, and if I go over to a higher time frame, like a monthly chart, see we have the support over here. So this is the support area, and it's probably going to attract some aggressive buyers. So it's quite possible that NZD USD currency pair is going to bounce back up from these lows over here, because if you look at the historical lows over here, price did bounce twice, at or around 0.5508 area. So the way I see, we might get another bounce back up one more time. So this is a possible scenario. That's the expectation. Now, if you let me take a look at the chart, the smaller time frame of NZDUSD currency pair. Okay, now you see market is actually trying to rise back up. So we have this long spike over here, and if we do get a bullish candlestick close above this resistance level, like we get a bullish body candlestick, then we might have a chance to look for possible buy trades inside New Zealand dollar versus United States dollar currency pair, because it is testing these old swing lows over here. So it did work in past, so it's quite possible it is going to work again over here. Okay, next one is the spot gold. Let's take a look at spot gold. Okay, the trend was up in gold, and price action actually dropped. It took out both of these bullish trend channels. Let's take a look at the higher time frame first. So market overall, if I zoom out a little bit, it just keep printing, higher swing highs and higher swing lows. So overall, I can see a nice uptrend. Okay. And the way I see, uh, we might get some sideways price action. Maybe gold is is on a sale now. It is, it might show some weakness in price action, and it might actually line or the median line over here. And then from these lows, we might get another bullish leg in price action of gold. So that's the long-term analysis. Let's take a look at short-term chart of gold. So I'm going to take a look at 4-hour and then 1-hour time frame. So as far as the 4-hour is concerned, I see that price action is trying to drop over here. We got lower swing highs and lower swing lows. So the pattern is telling me that it's a nice downtrend going on, and we got this bearish trend channel over here. So I do see a weakness in price action of XAUUSD pair. So this is gold, spot gold versus United States dollar trading instrument. So price might try to hit the median line or mid line somewhere over here. Okay, and then we might get a new low in price action. So the idea over here is to wait for a bullish pullback, and then maybe try to look for a possible sell trade in spot gold. Okay, that's pretty much it for today. If you have any questions, feel free to type inside the chat box, and I will be happy to answer your questions. So what you have learned today, I discussed the OCR, the official cash rate related to New Zealand. The core CPI, we discussed it. And then we also discussed the euro dollar, Aussie dollar, NZDUSD, and spot gold. These are the pairs, the assets that you need to watch out for profits. What you should do next? Stay tuned for the schedule of next week's trading webinar. You can subscribe to our social media pages. And if you're interested to learn more about trading, visit Trade Geek and access free trading courses for beginners, intermediate, and expert traders. The courses are available online. So thank you for hanging around. See you at the next trading webinar on Tuesday, April 15th, 2025. So that's it for the time being from my side. Have a nice day and bye-bye.